Hello everyone, here are the latest market news on October the 13th, 2020. Wall Street growls ahead of tech giants events. Wall Street rallied sharply on Monday amid expectations of the coronavirus package and rallies in Amazon, Apple, and other tech stocks ahead of the quarterly earnings season. Apple Inc. shares jumped 6.4%, adding $128 billion to its stock market ahead of Tuesday's event when its latest iPhones are expected to be unveiled. Amazon shares rose 4.8% ahead of the annual Prime Day trading event on October the 13th and 14th. Microsoft shares jumped 2.6%, helping lift the S&P 500 Information Technology Index by 2.7%. Optimistic sentiment also prevailed after the Trump administration on Sunday urged Congress to pass a shortened coronavirus bailout bill as negotiations on a broader package of measures met with resistance. The Dow Jones Industrial Average rose 0.88% to 28,837.52 points, while the S&P 500 added 1.64% to 3,534.22 points. The Nasdaq Composite climbed 2.56% to 11,876.26. Europe stocks looked mixed, J&J vaccine suspended. European stock markets opened mixed on Tuesday, and investors have to overcome setbacks over the challenges of moving towards the COVID-19 vaccine. The composite index of the largest enterprises in the region, Stoxx Europe 600, climbed 0.7% to 373 points. Germany's DAX futures contract traded 0.2% lower, France's CAC 40 futures and Spain's IBEX 35 were unchanged. And Italy's FTSE MIB added 0.6%, while the UK's FTSE 100 futures contract was up 0.2%. Shares of British banks fell yesterday after the Bank of England approached financial institutions to test their readiness for negative interest rates. Barclays dropped 1.3%, Natwest fell 0.6%, Lloyds Banking Group fell 0.55%. Weighing in on the news late Monday night, Johnson & Johnson has suspended clinical trials of the COVID-19 vaccine due to an unexplained illness in a study participant. J&J's move follows a similar move by AstraZeneca, which suspended late trials of its experimental vaccine in September. Hyundai builds EV factory center in Singapore. On Tuesday, South Korean company Hyundai Motor Co. began construction of a research and development center in Singapore, which will house a small electric vehicle plant. Speaking at the groundbreaking ceremony, Singaporean Prime Minister Lee Hsien Loong said the venture could produce up to 30,000 electric vehicles a year by 2025 and represent an investment of 400 million Singapore dollars, $295 million. Singapore is one of the most expensive places in the world to buy a car, and there is currently no car manufacturing facility here. However, the wealthy city-state has formulated ambitious plans to phase out petrol cars by 2040. Hyundai said in a statement that its new plant in Singapore is committed to reducing carbon emissions through solar and hydrogen power, will use technologies such as artificial intelligence and robotics, and will include a test drive for customers. China's imports and exports rise sharply YTD. This year, China's imports grew at the fastest pace in September, while exports rose significantly as more trading partners lifted restrictions on the coronavirus, further boosting the world's second-largest economy. Exports in September rose 9.9% year-on-year. Customs data showed on Tuesday broadly in line with analyst expectations and exceeding a solid 9.5% rise in August. Imports rose 13.2% in September, bouncing back after falling 2.1% in August and far exceeding expectations for a 0.3% rise. That left a trade surplus of $37 billion for the month. Strong trade figures suggest that Chinese exporters are quickly recovering from the pandemic's blow to overseas orders. As the global economy recovers, Chinese firms are looking to grab market share as competitors grapple with capacity cuts. China's manufacturing activity also increased as international trade resumed.